What's going on, guys? Just give me a quick sound check and we'll be good to go. Sound is good. Good to know. All right. Let me give everyone another minute. Just reposted the link. Hopefully you guys are doing well. Snowy day here in New York, so had to reschedule the stream this afternoon. And yeah, get started in a minute. If you're not subscribed, make sure you hit the subscribe button, hit the like button, all that good stuff. This is going to be a pretty casual stream. Just going to go over some thoughts on the market, obviously. The alts that I'm both interested in and positioned in. And I'm going to cover some breaking news on the Synquote side of things. It's not exactly breaking news. If you guys tuned in to the spaces last week, you might have picked up on this, but I'm going to elaborate on it. And we should wrap this up hopefully within an hour. I don't want to keep anyone. It's 7 p.m. here, so God knows I don't want to be on a stream late into the night. So, all right, another minute and get it going. See some familiar friends. What's going on, Asgard? Best city on earth. Yeah, I don't know. Depends on who you say that to. That's highly debatable at this point. I love New York, but it doesn't seem to garner the same love that maybe it did a decade ago. But whatever. We don't need those people. Anyway, okay. Before we get started, as a reminder, none of this is financial advice, strictly for entertainment purposes only. So I'm going to talk about the market briefly. I'm going to talk about, like I said, some developments on the Synquote side of things. I'm also going to go over just some of the features on Synquote, and I don't mean, go over, you could buy puts, you could buy calls, you could, very easily get into straddles and spreads. I'm going to go over some of the things that you might be confused by if you're, one, just new to options and new to that platform, and you don't know what you're looking at. So I'll briefly cover the Greeks. I'm not going to spend too much time on that because that is definitely not my options are not my obviously my bread and butter or my area of competence. I would say I'm competent in options, but I'm definitely not by any means the same level of or caliber of options trader as you will find on CT or just markets in general. Just options are a whole different complex ball game compared to trading just futures products and spot. All right, so real quick, I have a link that is in my Twitter header now that has all of the links with their discounts and their sign-up bonuses. So, I'm not here to tell you what exchange to use, but there's still some sign-up bonuses. I feel like at this point everybody's on an exchange, but some exchanges have better sign-up bonuses than others, and I'll switch those out as they adjust and as they change, and I'll keep you guys posted. Some people don't want to hear this because they're like, I don't want to be shilled a ref link. It's not about that. Like, some of them are, you're literally getting, if you're already on the exchange, just you could create a new account. And if you're going to be trading, just get some trading fees reduced at least. Some of the contests that are available, like, take advantage of them. If you could get free money, take advantage of it, right? There's also my book list that's in that link. There's a couple other things that I'll add in there from time to time. All right, so big picture. Today was a pretty ugly day, more specifically with legacy markets than crypto. Crypto held up quite well, so CPI came in hot today. Macro hasn't really been front and foremost in everybody's it hasn't been really, no one's really cared about macro, crypto Twitter wise. We went through a long period where all everyone talked about was macro. It was rates, it was CPI, FOMC, you know, what the Fed was doing, uh, kind of hanging on Powell's every word and any other Fed speaker as well, or Fed member as well. And that just hasn't been the case the last quarter for good reason, though. You know, the market has been trading really well. Markets have shrugged off all of the issues and things have been really good. So, you know, there was no need to focus on that when the market was unaffected by it. But today's interesting because if we're seeing an increase in inflation, you know, and they're not getting close to their target rate, or their target level, the market has priced in cuts and hasn't priced in any hikes. So this is something to consider. You know, what we're seeing right now is basically soft landing priced in. And if it ends up being the case that things are beginning to really heat up again, I'm not going to say the market's going to price in hikes, but definitely not pricing in a soft landing. And we could see, you know, the S&P and equity indices begin to give back, you know, maybe a significant portion of those gains. Who knows? The point is, these things are worth knowing because crypto is doing well, sort of because all markets are doing well, right? It's not that, you know, it's not that there's that sort of tick for tick correlation that's present, but there is something to be said for there being a bit of freedom to speculate under the pretense that the coast is clear, right? And there's no major macro overhang or issues looming that we need to worry about. So markets have been able to move freely, to mark up. And I think if this changes for equities, yeah, I think it's absolutely going to spill over into our market. How much, you know, that depends. And it depends on, you know, if equities move down, if they move down sharply or if they move down, you know, constructively and calmly. But either way, not trying to bring it to everyone's attention to say start really focusing on this again, but it is something worth keeping in mind, right? I don't think that it's an issue as long as the S&P is above prior all-time highs. So I said something this morning. I said, you know, a good heuristic is the S&P above 5,000, you know, long risk. If the S&P is below 5,000, you know, something to the effect of be cautious, or, you know, I forgot exactly what I wrote. But the idea is if it's more so if we're trading back within the prior all-time highs. So if we just look at the S&P and we're trading back underneath, you know, 4,800, I think then there's an issue. I think as long as we're trading above 4,800, there's no real reason to panic or to get overly concerned. I said 5,000, but, you know, that's probably a little too tight. But either way, you know, even with the hot CPI and everything I just said, I think we don't really have to worry about anything until we're back trading within the structure. So, you know, may never happen, right? My point was that if that does happen, you know, if we're going to move down violently, I can't stand when people in crypto and crypto Twitter act like, you know, that wouldn't spill over into our market, right? It will especially spill over into our market now when you have the ETF products gathering that much more capital. And that kind of capital, to be honest, like when we're talking sharp corrections, just something to keep in mind, that kind of capital panic sells just as fast as everybody else. And it's basically the quality stuff. So you saw today after CPI, what recovered the fastest was NVIDIA. So the quality stuff is the last stuff to be sold. The things that were last added are the first things to be sold. So just keep that in mind. Either way, so big move down in legacy, and there was an immediate move down in BTC. We saw some corrections across the board with alts, and this is just a few charts right here. You have Bitcoin, you have Solana, you have SU, you have Ethereum, ONDO, MINA, WIF, and the NASDAQ. Some regaining ground better than others, obviously. So SU up, decent bounce by MINA, Solana, decent bounce, Bitcoin, almost everything recovering the gap besides WIF, but I don't know if WIF had the extent of the move that everybody else did down. This might have held up slightly better. We'll look at the 5-day. Yeah, it actually is held up slightly better overall. I honestly don't think there is really much cause for concern with BTC as long as we are. I mean, and listen, we're not in an area where I would say this is the best place to open up longs, obviously, right? But for all intents and purposes, you could define a long outside of this range, right? Reasonably speaking, you could say that this multi-month range, this breakout offers us a pretty decent area to define a position if we're treating the highs as prior range highs as a support and resistance flip. You could say that, this might be a good area to define a position. If you're defining fresh positioning, you have this monthly VWAP right here, pretty much value for this entire structure between 45.5 and down to like 41. So top side of that structure being reclaimed, right? So we're rejected, now reclaimed. I mean, we're reclaimed going all the way back to, what was that, 2022. But either way, I mean, someone could say, hey, that's a decent area to define a breakout position. I don't know if I would be looking to open up fresh longs up here. What I would say is that as long as this is, you could actually be pretty generous as long as this is trading, and this is going to look like a pretty wide area for, I guess, a lot of people, especially if you're out of position. As long as we're trading, above 40K, this can do a lot of things and still resume higher and not really, again, not really do anything that's cause for concern. Sorry, I'm actually, during the stream, I'm realizing I'm starting to lose my voice, and it's giving me a little bit of trouble because I keep catching the back of my throat. So, we have ETF inflows right now. We have a breakout of a multi-month range, really strong spot-driven market. I mean, Coinbase premium is still there, at times getting pretty high. Ooh, my voice was about to go again. So all things look good. Like, there's not a whole lot to say positioning-wise with this. Like, I would define any new positions here other than what I said, about this breakout. But that even, like, buying at this level, I feel like you're just better off putting money into other areas, whether that's altcoins or potentially ETH. Across the board, this move earlier, and sorry, I'm trying to recap this stuff pretty quickly before we get to the Synquote features. This move earlier kind of just wiped the OI from here. Let me back out for this entire breakout. So that's good. I don't know why that's, excuse me, just give me 1 sec because this is not behaving. There we go. So for the entire breakout, right, for the origin of that move up through 50K, you can see the open interest tagged on the way up. We've since cleaned that out with this pullback and then some. So, there's definitely a lot of leverage in the market, right? You could expect that as the market continues to move higher, there's going to be more leverage in the market. But I don't know how sensitive things are up here. Like if I think we would need to move much lower to see a lot more liquidations, right? But for this move, we've already cleaned this out. So again, not really concerned by this sell-off. Not really concerned by it unless we see, legacy markets really begin to pull back. So sorry for the boring coverage of BTC. It just doesn't seem like there's anything really worth talking about with that. We're refilling this puke, so you have an inefficient move down, you refill that. Again, on this spike down, you actually had a zero print at the low. So really nice lows down here. If you were looking at this and you were looking for a good buying opportunity post liquidations, these two zero prints on the ask, just an indication that spreads blew out and that never went offered. So, I haven't shared this chart in a while. I haven't shared a footprint chart in a while because it hasn't really made a whole lot of sense to focus on the very low time frames. But needless to say, that is a good sign to see if you're trading intraday and if you're looking for a possible precision entry. As far as alts go, again, this is just broad, and then I'll get into the Synquote stuff. There's a little bit of froth coming back. I don't know if I want to say froth. It's not like things are nearly as overheated as they were. For a while back there, we were, this is going back like, I mean, if we look at a chart, it'd be easier. But for a while, like this whole thing was like 100% annualized. The funding was 100% annualized for alts. So, that's your cost of carrying for a year. So very ugly, obviously. So this is starting to just come back, but, I posted something this morning talking about funding, and when funding really starts to matter is when the cost of holding the position really begins to outweigh any of the returns. So, it's very obvious. It's kind of a no-brainer. If the market is no longer moving up, and funding is really high, that cost begins to become pretty burdensome. Depending on, if you are using a lot of leverage and you don't have a lot of margin up for that position, you're really, using leverage to amplify, and you could really eat through that margin, right? Just through funding alone. So, this is something that is always worth keeping an eye on. But if the market continues to move up, it's not really that big of a deal, because if you're paying, even if you were paying, let's just say 1% a day, right? If markets are moving up on an average of like, if you look at some alts, their average range for the day, average from low to high, even not even just entire range, days being green, right? Taking that for granted, is over 10%, right? So if you're taking trades that you think are returning multiples of what the funding is, it's justifiable. So it only really matters when the market is stalled out and, when that really begins to add up. But also you got to think that when that funding becomes attractive, you end up baiting shorts in to capture that. And then the spot market can lift up again, and you could end up squeezing those positions out. So this is something that it's beginning to slightly show signs of heating up again, but it's not nearly where it was. We had a pretty good clean out. As far as like euphoria goes, this is something else that I touched on this morning. It's really reasonable actually to expect that people are going to be somewhat excited, and you could determine maybe you could say, mislabel that as euphoria. The market actually seems pretty quiet to the fact that we broke 50K. Broadly speaking, it seems pretty quiet to that. Like people are either hedged or on the sidelines and missed that this most recent leg up. But euphoria and excitement, all these things are, honestly, they should be expected, right? Because not long ago, Bitcoin was, under 20K. And we were through a really long bear market. So there's plenty of reasons for people to be happy. And you can't just take that on the timeline and immediately say just that on its own is like, something to fade. Anyway, all the boring stuff aside, I'll get into alts and just my thoughts on some individual pairs after I cover what I wanted to cover on Synquote. So let me make sure I have my drawing tool up out of the way. All right, so if you guys don't know already, I'm part of Synquote. Synquote is a decentralized options exchange. It is the best decentralized options exchange, by the way. You don't have to have a crypto wallet. You could sign up to this right through Gmail. It is the #1 crypto options exchange by volume, by open interest, by liquidity, and it actually competes with Deribit in a lot of different ways. This is an RFQ setup, so it's a request for quote. So what that means is if you are, it's not an automated market maker system, right? So you see these quotes right here, but we're going to go ahead and let's say you wanted to buy, let's say you wanted to buy the 2,700 calls. You would actually request, let's say I want to buy 20 ETH worth of 2,700, the 2,700 strike expiring. This is this week. So you just request quote, and you're going to get a quote right back. So right now listed at 20.34, and a fresh quote is 29. So very simple stuff. Here's the thing. So far, Synquote has been, to this point, exclusively an options exchange. Within the next, I believe, week or so, we will be listing perps. So you will be able to trade perps and options on the same exchange. And all I can tell you is we have it set up so that on day one, there's going to be a significant amount of liquidity. And I think we're going to start with BTC and ETH, right? Because there are BTC and ETH options. And this is really useful because let's say you're trading, your long Bitcoin calls, you'll be able to actually scalp around those deltas with the perp product. And this can be, there's a lot of different ways you can use this. It is just obviously to your advantage to have perps and options on the same exact exchange, right? So this is going to be a really awesome feature. This is not the only development, and these are not the only pairs that Synquote is going to be limited to, but this is a big step, and hopefully this will bring a lot more attention to how useful and how good of an options platform this is. So again, perps coming hopefully in the next, I'd say next week or two. All right, I don't want to say a week and then it's 2 weeks, but Ahmed and the team have been working really hard and putting in a ton of hours. So it'll be worth it because, like I said, right from day one, there's going to be a significant amount of liquidity, which is really all that matters, because you go on some of these dexes and automated market making systems suck. This is way better. Not only that, like Synquote allows you to do the request for quote, but you could also use limit orders, right? So you could set limit orders if you want. So if I want to, I put on the advanced view, go to that same 2700 strike ETH call, and we could actually just place a limit order. You could use this to take profit. You could use this to enter into positions. So it's really useful. There's no other DEX that's like this. One thing I do want to go over real quick, though. So this is something that maybe a lot of people are not familiar with. If you are on the simple portion of this, right? So let me make sure I can highlight with the drawing tool. If you're on the simple portion of this and you click on each one, you're going to see that there are these values below, right? So delta, gamma, theta, vega, rho. Rho is actually not that, actually, I don't know a lot of people in CT or deltas are not something, you don't have to be, obsessed with deltas, or you don't have to really worry about deltas, honestly, if you're just punting options. But we're going to go over them either way. So as far as the delta, excuse me, not delta, I meant to say Greeks. So your delta is obviously one of the Greeks. And there's things outside of this too, like Vanna and can't even think of the other ones. You have to be a real options brain to know this stuff. But as far as the delta goes, to keep it simple, where did my drawing tool go? All right, there we go. I have to use this shitty drawing tool and have to back out of it so I don't get stuck in it. So the delta measures the sensitivity of the options price, right? So to $1 change. And that fucking drawing tool just came off again. Excuse my language. So in this case, if the delta of that contract is 0.27, that means that for every $1 increase in the price of Ethereum, the price of the contract goes up by approximately 0.27. So you can see right there, it's $18.99 for one contract. If the price of Ethereum goes up by $1, the price of that contract will go up approximately by 27 cents. Okay, so pretty simple. The closer you are to in the money, the more you're going to be, your higher deltas are going to be more in the money, right? Closer to 1. And your very low deltas are going to be way further out the money. All right. So that is delta. The gamma, I don't know why this keeps disappearing. Gamma is this one right here. I guess it doesn't matter if it disappears when you guys see me click on it. That one stayed. So gamma is actually the rate of change of that delta, right? To a $1 change in price. Okay, so for a $1 change in price, how much does the delta change? So this is going to show you how stable, or whether the gamma is high or low is going to show you how stable the options delta is. So that's pretty simple. You hear people talk. It's not simple. I don't want to say that any of this stuff is simple. But like I said, I'm just going to go over this stuff. I don't think that most people using this are going to really need to obsess over this. But you guys do hear things about gamma and gamma squeezes, and in particular, very popular gamma squeeze being GME. Hopefully you guys saw that movie. That was actually a pretty good movie. The next thing is theta, which is right here. Okay, so theta decay, you guys have probably heard of that. It's actually this measure of sensitivity to the options price to the passage of time, right? So this is where this is where you'll hear of the phrase time decay. So how much or what amount the options price is going to change, decrease rather, right? It's not going to go up as time passes, assuming everything else remains constant. Okay, so for this, like this theta of this contract's $20.33. What this means is that for each day closer to the expiration, right, all things remaining constant, which is not going to happen. This is a very high theta. Because this expiration is close. All things remaining constant, each day passing, the value of this option is going to drop by almost $8, right? So this is why buying short-term options is, unless there's a major catalyst, it's always a bad idea, right? Almost all of them are going to expire worthless. And this is a pretty good mathematical representation of that. You could easily see, all right, so this expires on, this right now, contract is going down as we speak, the contract is $20. The theta is -8. So we're talking every day this goes down by $8. So this expires on the 16th. It's going to be worthless before then, right? My arrow again. Okay, and now we are on Vega. All right, so Vega is the measure of sensitivity of the options price to changes in volatility. So this is changes in implied volatility. So 1% change in implied volatility, and you get, so this is the Vega of this is 69. So if the price of Ethereum increases by 1%, the price of the option is expected to increase by approximately 69 cents in this case. Okay, so it's a 1% change in the implied volatility though. So this is not the change in price, right? So measure sensitivity to implied volatility. So volatility, right? Now this is obviously, this would be important to you. This would be important for you to understand how sensitive the option is to changes in sentiment, conditions, and anything that's going to affect the option's volatility. And then rho, lastly, this is for every, I think this is, so I'm sorry, I'm going to sound like a fucking moron right now. Rho should be for, I think it's 1% change in, was it one? Well, let's look this up. So this should be in the current interest rate. So where'd it go? So I'm going to try to wing this. This should be the risk-free rate. So I'm pretty sure, let's see. Rho is the rate at which price of derivative changes relative to the change in the risk-free rate of interest. Okay. So a little bit more relevant, I guess, more recently. But this is not going to affect your positioning on Synquote, and if you're trading short-term options, right? There's going to be no change to the risk-free rate in the short amount of time that's going to affect your options position. But this is always worth knowing. And if I fumbled anything, I apologize. This is not stuff that I really focus on. I focus on, more than anything else, I'd say I focus on Delta. This is going to be the most common one you'll hear referred to. Delta you could actually take as an approximation of the percentage approximation of this expiring in the money. So if you look, let's say we want to, let's use an example. Let's use BTC. Let's say, what is the probability of BTC being above 60,000 on March 29th? Okay. Tapping 60,000, there's about a 1 in 5 chance. Delta's 0.2. So there's about a 20% chance that the market BTC hits 60,000 by March 29th. And again, it's a rough approximation. And this should be easy to understand when you take into account that the closer to something being in the money, the higher the delta is, obviously, right? But this is probably the most common one you'll hear referred to. And when it comes to hedging, this is something that you, again, are going to need to take into account. Theta is obviously very important. Buying short-term options, unless there's a very significant move or a catalyst, a lot of the times you're giving money away. Now you could sell short-term options, right? You could write options, But there's always the risk, obviously, of them expiring in the money. And, let's see, for example, if I wanted to sell, a short-term option, let's say, this one expires in 7 hours. Probably not much of a market for this right now. I want to sell the, let's see, I want to sell the 49. What's price out right now? All right, so I want to sell, so it's 49. Okay, so up here. So a bunch of this is going to change as well. The UI is going to change a little bit. So price of BTC is 49,500. If I wanted to sell the 50K strike calls, right? So I'm going to sell 10 of those. And there's 7 hours to expiry. You're not going to make a lot of money, right? But it's $300, right? And if you own BTC, it's basically covered calls. Now the BTC is not on this platform, obviously, so it's a little bit different. But you could sell options all day that are closer to expiration. Things that are out of the money, and make a decent amount of money that way. It's not going to be much, obviously, right? $31 per contract. And how likely is it for BTC to move $500 within the next 7 hours? I mean, it's not that unlikely. But yeah, very, very useful platform. It'll be great once the perps are available as well. But I did just want to go over some quick details with respect to the Greeks. You do have the easily set up strategies right here. So you have strangles, put spreads, call spreads. This is simplify something that you would normally have to do on your own. I'm not going to go further into this. I don't want to spend too much time on this. I'll make a separate video for this platform so that you guys can have a better understanding of it. I see one of the questions is, does it show your positions payoff diagram like Deribit? Yeah, it actually does. So if I wanted to, for example, now it doesn't have the same payoff diagram that Deribit does, where you're able to simulate trades, right? Multiple trades, overlay them. But for example, if I wanted to buy, if I wanted to, if I thought the market was going to nuke this week, and let's say, or nuke into the end of the month, February 23rd, right? And buy puts, let's say, I think the market's going to break below 40. I'm probably going to buy. Well, let's say I think the market's going to trade back below 45. I buy the 44K puts. And it does give you a payoff diagram. So 10 BTC. This is $146 per option. So total cost $1,465. And the max profit in this case is $438,000, right? It's not, I don't think that's likely to happen in the near future, right? Your max loss is the premium you put up. Break evens would be at 43,853. So, market's not going to zero, so you're not getting that max payout. But if BTC is, at 42,700, right? It's a $10,000 payout. Now, a lot can change between now and then, even if prices are not at that level and vol is completely repriced to change the price of that option to make the payoff even more. So yes, you do get some kind of a payoff profile. All right. Yeah, I'll make a separate video and we'll put that on the YouTube. All right, so let's take a look at some alts. Sorry guys, I feel like this stream is a little bit low quality. I'm kind coming off of a sickness, and I could actually feel myself starting to lose my voice again, which is a pain in the ass. All right, so I have a watch list that's isolated. A lot of the new pairs, I've mentioned this a few times before. I'm interested in the new pairs, although I don't know if that's something that's gonna become overly popular, right? Where everyone is doing the same thing, and the market maybe goes back to quality. But there's a few things that stand out. So, and then I'll take questions after, because I do want to wrap this stream up with an AMA. SU is something that is still trading above this opening price. So this is a new listing, right? A new pair. Had a really long accumulation period. Very obvious rounded bottom. Almost everything that's traded back above its opening print has had a significant amount of follow through. So in these conditions, I expect that SU continues to outperform. As long as SU is holding this, sort of 130 level, I don't see any real reason to change this positioning. A lot of my all positions are in spot, by the way. I am trading around some of them, but as long as SU holds this I don't want to call it like prior all-time high because it's just the opening print. As long as it holds that level, I think this continues to mark up higher. A lot of pairs did this early on, so they'll have, an opening listing, go through a really long period of reaccumulation or corrective period, consolidation, whatever, and then once they trade back above this opening level, I hate to use the term price discovery because everything's price discovery, but it tends to overthrow a lot more than what we're currently at. So we're only, I hate to say only also, but we're 30% off that level. Most of the pairs we've seen at least a 2x or 100% move off of that. So that is something that I think I could kind of just not set forget, but let that do its thing. Again, I think, as long as you're holding 130 and you're not violating the structure on the way up, I have a few things on this chart. You get the monthly VWAP, prior month's VWAPs. As long as those levels hold, I think this is good. I changed my mind on WIF, so I talked about this maybe a week ago. I think I talked about this in the spaces too. This to me looks like it's about to mark up a lot. So if you look at the weekly structure, which I think a lot of people should focus mostly now on the high time frame structures, this is, there's a lot of congestion over here. Like looking at the weekly and then looking at the daily, it's kind of deceiving. But this is so far, 5 days left. This is a breakout of these highest weekly closes that we've had up to this point, and this is all we have. And now, of course, we're still stuck within this larger range, but the benefit of this kind of structure is anything that, one sec. So just pretty clean. Anything that ends up marking up above 45, right, above this high, I think that, this is going to lead to, again, another really big move. It probably, I'm expecting that WIF actually heads up to a buck. And maybe that is kind of a level that we start to see get front ran. But this right now is on the low time frames, on the high time frames, just showing a really nice sign of reversal off of these lows. So you have a pretty nice intact trend on the way up. Again, probably going to run into some resistance around this 39 level. But I think this continues to mark up, and it's pretty basic. It's very popular. It is one of the I would say more serious meme coins at this point. The hat and the bull kind of did it for me. I don't know if that's a dumb thing to think, but I think that the WIF is definitely earning its place. And it's, as long as Solana continues to do well, I would expect this to continue to do well also. So I'm in WIF now, and I don't think that I would really have any reason to change this unless we started putting in new lows. Now, mind you, this is still stuck within a range, so we could revisit this lower 20 region and still everything be okay without making new lows, but I don't know. MINA, this is another one. So high time frame wise, Very nice SR flip on the weekly, still intact. You know, everything right now that's consolidating, if you're getting breakouts to the upside, you're probably just looking at the second leg. And the second leg in a bull market is usually the biggest leg. So right now you have a little bit of a slight break as far as weekly structure goes. So we closed higher through that high. Daily structure grinding its way up. These, again, same thing as Sue. Like high time frame wise, I don't see any reason to mess around as long as we have this kind of corrective structure on prior range highs. If this was a blow off, we wouldn't be moving back up toward it. So this original move. So MINA, I mean, honestly, if we're looking at targets, I think MINA is looking at a second leg up, and you're looking at, you know, if you look at this prior structure that we were kind of bouncing off of to begin with, good amount of consolidation here. I think that this ends up trading back towards that 250 level, and then probably ends up hunting these highs up here. So I expect that, you know, as long as we're holding the high of this previous structure, if we're looking at continuation, this next leg, right, should be bigger than the first one. So MINA is something that I'm in position in as well. MAVIA, I don't have a position in MAVIA, but again, it is a new coin. And again, like I said, for an outright pullback, you get a couple week, you know, you get sort of a multi-week trend move, maybe a multi-month trend move, but then we're always due for a much longer accumulation period. But I don't want to expect that longer accumulation period during this kind of environment. I'm leaning toward things continuing to do well in the beginning. So Jupiter is an example of one that just isn't. But ONDO, this is something that I am both in position and still continuing to monitor because I want to obviously add to some positions if they're going to continue to mark up. But this is new, right? New listing on, not new listing on, how long has this been on? Where's the original? They're all relatively, I guess ONDO is, I don't know what the first listing was. I don't think it honestly matters, but how old is ONDO? It's a new coin, but I want to get an exact date. Yeah, okay, so we are going back to January. So the point I was just getting at earlier was this is for a new listing on exchanges, this kind of consolidation, I think they're pretty easy to play even if you're not in position early at the lows or below VWAP for this move. Any kind of breakout above these tends to lead to a significant expansion upward. In this case, I would probably look to add if ONDO ended up breaking to the upside and holding that level as support. INJ. INJ is one that is actually trading below its yearly VWAP, so having some trouble bouncing off of that. These VWAPs right here are monthly VWAPs, or actually, yes, these are monthly VWAPs. But INJ I think is worth holding because it's one of the strongest performing coins of the last year. Up only in 2023. It's up only so far. Not up only, excuse me, so far in 2024, but up only for 2023. Where I got confused was there was a lot of pairs that were not up only, but then had a really strong Q4. INJ has been just an absolute beast, and again, just a simple concept in my opinion is anytime we have an all-time high break, this consolidation might last a while, but usually the continuation move off of this is much more significant. So if this is making new all-time highs, I don't see any reason to get bearish on this or to really change much with I and J unless we're starting to trade back underneath this level. And even then, I'd be mindful of with I and J, just because this one's been so strong. I would be mindful of moves that, let's say we're looking at some point like a major correction in alts, that eventually would get bid up, right? If this ended up spilling below 20, I would, if we had a big liquidation cascade below this, let's say we took out these lows and then we're trading back above, I think that that's as clear sign as you're going to get, right? So, this looks really strong. It's been strong all year. It's recovered its all-time high. So these things are obviously things that, should be pretty easy to judge. HNT, this is something that's actually just starting to break out. So we're looking at, we just actually made a new highest daily close. Honestly, this is probably, I would expect you get something that leads to a spike up and then we retest this level. And this would be something where I would just leave bids right here. Tag on some at market, leave bids right here. This is probably moving up much higher. Now, all this it is obviously contingent on BTC not absolutely just taking a dump. But the really strong pairs right now are, even if BTC corrected, right? Let's say Bitcoin pulled back to like the midpoint of the range that we just came out of. I would be really focusing on alts, honestly, more than BTC. Like if BTC did something like, this wouldn't be unreasonable, right? Let's say this was the move everyone was excited for, break above this high, 50K tagged. We're still moving sideways, and then, oh, fuck. We end up dropping back down to low 40s. I think this would be definitely a back up the truck moment for BTC if we return back to this level. There's just so much. There are so many buyers right now that are looking to get involved. The ETFs are finally doing really well, trading back above their opening prints, seeing a ton of inflows. Again, I don't think the stock market's going to take a shit, but if BTC ended up having a much deeper pullback, yeah, this would be a sort of back up the truck moment for BTC, but I think I'd be more inclined to just focus on alts, to be honest. You're really strong alts. You want to look for what is absolutely just ripping off the lows. But yeah. What else? Let me look through the chat because this is kind of a bummy stream. Yeah, I was sick for a few days. And I was sick to the point where I didn't go to jiu-jitsu, which is always like, that's a good sign that I'm sick, because I would go to jiu-jitsu regardless most of the time. But I had a little head cold. And the thing is, like, if you have a head cold, there's a sickness going around. If you have a head cold and you really exercise really hard, you could bring that head cold down into your chest. And then you just, better way to put it is you could just make yourself sicker. So I took some days off. I was absolutely shot and started feeling better yesterday. But I guess I'm still kind of carrying something. Let's see. Any AI plays? So I'm not in Tau as much as I would like. But Tau, Render, I'm in Render. I mean, this is just something like this. It's just very unlikely, in my opinion, that you stop on a consolidation like this. Like now that we've had these, and anything really that looks like this, now that we've had these really big pullbacks, and now we're just forming this kind of, there's larger ranges in some cases alts are breaking up. It's very unlikely that something like this doesn't continue to put in at least another leg. So Render is something that I'm going to hang on to. But Tau is something that apparently everyone agrees on being an incredible project. And the thing about Tau that I like is that they reference to the supply being the same as BTC. So it's like, all right, even if you don't understand the white paper, hey, we have a really low float, we have a really low supply. So, but it is deceiving because everyone is talking about Tau. You'd think it would be the number one traded project some days on the timeline, but the trading volume is really low. So that's something to consider. It's like what price it currently is. It's on barely any volume. Let's see. TIA is another one, obviously, that I should have mentioned earlier. But TIA does look like it's lost some steam, right? The thing about TIA is if you look at TIA price-wise, there's been a certain cadence to this the entire way up. If we look at TIA on the chart and we just look at something like open interest, I mean, we've reset a good amount of positioning on the board. So there aren't a lot of alts that are still really crowded positioning-wise. So we've had I mean, you can't look at open interest on the really high time frame because the market's much higher. Yes, there's absolutely more positioning behind it. But in terms of like short-term stuff, there's not a lot of alts that look like they're really crowded locally, like as if they need major washouts. What else? No, Synquote is non-KYC. Circulating supply, you can just go to any one of the data websites. CoinGecko is a good example. No, I'm not looking at ARB right now. Yeah, my long-term portfolio always has BTC. BTC is the only thing that I really take truly seriously, and that's always been the case. I've always been a tough one to convince of alts having any value besides being either short-term trades or long-term trades, but still trades. For me, BTC is something that I am very determined is going to be continuing to move higher. But I'm thinking in terms of like over the next decade as something to take for granted, rather than I don't think in terms of a lot of people will talk with conviction over like the next 6 months or so. I just think that it's a new asset class. BTC will benefit the most. So I've been in ETH for a while now. Because, as I said, as long as ETH holds 2150, this was a while ago. It was this SR flip. As long as that's holding, this could take a while, and with ETH it often does, but I think that this moves at least to 3K, and that's being kind of conservative. So, I don't know about the chances of the ETH ETF versus BTC, but I think the market's still going to pile into that trade. It's better now that BTC is doing well and the BTC ETFs are doing well. Right away when we sold off, it obviously wasn't looked at the same because the market saw that and said, okay, yeah, there was a trade on. That came off and now we're moving down and it's not maybe what we expected. But now that prices are higher and the ETF is trading above its opening print, it's definitely a positive outcome. It was always going to be, but it was just a matter of how long. So I think the market's going to come around to ETH, and ETH will probably bounce around though for a while between 0.5 and this sort of, I would say 0.6. Who knows? But ETH has always been that way. Like if you're in ETH, you just have to have the understanding that it's going to take for a ride. It's the ETH beta trade. Like as far as like I've been burned by it before. So LDO, LDO and optimism. I'd much rather be more positioned in ETH when ETH is already being pretty pesky and troublesome than try to time everything in an ETH beta play. Unless it's during a really strong ETH trending move. I've just been burned a couple times. I mean, if you look at optimism, high time frame chart looks good, right? Making new highs, holding that prior all-time high, grinding up now towards the current all-time high, having held that level. So I think this continues to do well as long as ETH does, but I'd rather just focus on ETH. Yeah, I don't know about. So the weird thing is that this entire move up off the lows hasn't really had the pullbacks that we've seen in the past. So maybe we don't have those because there's different participants in this market now. There's less, of other participants that we used to have, namely FTX, and some other well-knowns that are, either in jail or just less relevant. But yeah, market structures may be different. Maybe we're not going to be getting those types of pullbacks. Are they out of the question? Absolutely not. I think that so far we have clearly been bid up sooner than we were previously, and maybe that's because of FTX's absence and what they did to the market. I don't know. I was anticipating more of a pullback before halving, but it could come after. The thing about halving is like as soon as the market starts, when the market is strong into halving or even flat and grinding up, like there suddenly becomes a race to get involved because everyone sees that the trade is on. So maybe it comes after this time because we didn't have, the substantial pullback that was closer to it. I don't know. We still have time though, right? So it's only the first 2 weeks of February, so a lot can happen. I mean, after a move like we had, I always anticipate after a big move in BTC, we're going to get a big move back in the opposite direction before continuation. But we'll see. In the short term, like how much could this go higher without pulling back? I don't know. We just broke outside of this range though, so I'm trying not to lose my voice. I have like this pit in the back of my throat. Yeah, so as far as like top 5 go, BTC, ETH, Solana, and then the other 2, that's tough. I mean, my portfolio is literally BTC, ETH, and Solana. And, it all depends on your portfolio size, your risk tolerance. For some people, BTC going up another 30% is a massive payoff, right? And then if you're dealing with a smaller portfolio, you probably want to go further out the risk curve to search for, greater multiples than that, or at least multiples, period. But my core weighting is it was actually, for a while it was flipped. It was ETH. I was BTC, ETH, Solana, and then it was ETH BTC, and then I took that Solana spot trade off. Ended up buying Solana from like 29-30 area and then sold it New Year's Day at like, I don't know, an average of maybe like 1 to 103. I posted, I don't remember the exact prices. It was like a couple minutes after, literally a couple minutes after New Year's Eve. I was in Disney World. My wife was watching fireworks and I was laying on the bed next to her, getting out of my position. That was for very, I had a plan to do that. I didn't want to have that tax event in that year and just carried that forward either way. I ended up getting back in that spot, but it's been those 3. I've since gone back to heavier BTC, but as far as the other 2, I don't know. I mean, Link has been tried and true for a while. I mean, no one. It's honestly it's a really good looking chart. It's not as popular anymore, right? So you don't hear about it all the time, but it's proven that it's lasting, and that it has a place and a function in this market. Maybe unlike a lot of, more so than a lot of other things. But those, if it's usually just a couple pairs for me, and it's almost always BTC and ETH, and then it's Solana's as of the last year. But my long-term portfolio, it's very difficult for me to hold on to like alts with any level of belief. Yeah, since it is like a new norm, but yeah, I briefly talked about Caesar. I briefly talked about some of the macro stuff in the beginning, but if you want to rewind, um, yeah, just as far as dimension, I might have to hop on another stream this week because I'm just absolutely foggy brained right now, and this is a one sec. Let's get it. This is doing one of those again. It's a nice clean consolidation, but the benefit of clean consolidations like this is that if you're not in dimension right now and you're wondering where you should get in, I feel like things like this are better off just buying the breakouts in these conditions. So, you either buy I don't know, the anchored VWAP for this move is, we could actually put on an anchored VWAP to see exactly where it is. Let's go back to the 7th of this month. So it's basically in the same area as this monthly VWAP would be. As long as this is holding that VWAP, it's from a positioning standpoint, like any new positioning that was put on after the fact or after the listing is on average in the money, right, or in profit. It becomes troublesome when we start trading below that. I personally, something like this, I would want to buy the breakout, right? If we're going to be moving sideways cleanly, right, we have pretty well-defined highs and lows, I think you could just get away with buying the breakout and looking for just clean like 20% moves, to having take profit levels at, let's say this is a break of 8, having a take profit slightly before 10. But there's not a lot of new listings like this. There's really none that I would just buy indiscriminately and say, I'm just going to be buying this, expecting it to be much higher. Because the trouble is, like I said, almost all new pairs end up doing something where they consolidate. Either they mark down first, consolidate, and then have a couple, maybe a multi-week or multi-month trend, and then they go through a much longer corrective period, a much longer reaccumulation period. So, I don't know if I would rather just take trades around this until we have a much longer reaccumulation period. So in the beginning, take the breakout trades, then buy this with hopes that it's going to be much higher in the future. Because let's say a couple months from now, we're still sitting down here being reaccumulated, and then I'm second guessing the position. But I keep this on the top of my watch list because it's one of those things where the breakouts tend to be really good. So when you have something that's clean, best example is Celestia. So like Celestia really early. I might have been like one of the few people charting this down there. And the Zoomer Oracle guy. And this was just, again, what the fuck? Why isn't my drawing tool working? It was really clean, right? finally got a breakout. It's really easy to get along behind that. This one obviously lasted. I mean, we're still going. But the benefit of clean consolidation or structure in the beginning is, don't long it until it's broken out and proven itself. So same thing here. I feel like I could say that there's an easy freebie long between, like $8. So these highs and 10, and right, slightly below 10. And Jupe is just struggling off the listing. So I would, for something like this that's continuing to be down only, I would wait for a change in market structure. So, and this is why I still have it on this portion of the list, because it is something that I, again, there's some really good trades for these new listings and airdrops. So you see on the way down, it's pretty clean. Consolidation. You had that big puke. Retest, breaking down again. And until we do something where either we're retrading back above, so there's a good amount of volume right here. We're retrading back above and being rebid above prior structure. So let's say, for example, the 50-cent mark. So imagine that we spike lower. Suddenly we're being rebid. And now we're trading back above this high volume node and beginning to base out just higher, right? Building structure, basing out higher. I mentioned this during the last video. We have an anchor VWAP that's good to use from the origin of this, right? So if we're basing out and you have what is, maybe a pretty obvious, where'd it go? Descending line at that point, basing out, and then you have sort of a confluence between the anchored VWAP, the rate of descent, and whatever descending diagonal. I don't really care for diagonals too much because you break them when you pass through time either way. And price being rebid, I would look to buy Jupe. And hopefully that didn't sound like mumbo jumbo. But if we're retrading above prior levels that, again, more recently rejected us, and we're trading back above this anchored VWAP from the origin of the move, I think it's a good way of saying that there's a flip in control, right? And then maybe you can start targeting these highs. And then maybe at that point, price had been moving sideways for a while before it's done that, and there's really clean structure to get long off of. But something like this in its current form is not something I would just buy. So AVAX, I like AVAX as long as Solana continues to do well. I think that AVAX is, what did I do? Before I accidentally took something off my, it was AVAX watch list, hit the X by accident. I like AVAX as long as Solana is doing well. I think this is honestly a good Soluna AVAX play for anyone who is around, but high time frame wise too. I mean, this is the first big pullback, first leg. This is probably going much higher, right? As long as 30 level holds, Solana, this is going to follow Solana. That's just my bet. It's going to follow Solana, and I think that, there's a decent case for AVAX outperformance too. And the L1s are, honestly, the L1 trade is probably going to exist for a long time. So as long as it's reliable, continue to take it. Super. And then I'm going to wrap it up, guys. And this stream was like a 2 out of 10 stars or 1 out of 5 stars. Wow. Yeah, that's clean. Very clean. So really important level between 37 and 55. Holding and flipping. This is just going to continue to move up probably towards that November 21 highs. I mean, the benefit of consolidations like this is, again, just kind of retouching on what I was mentioning with the airdrops and early coins. When you have something like this, you don't have to think too much. You know, if we look at, for example, I'm going to wrap it up, guys. I'm feeling a kind of a shot again. If we look at this on the daily, it's your highest daily close right there, right? So market has been just very, if something is obvious, that's when it's useful, right? Very obvious level. Market is completely unable to close through that. Here's your first daily close. Now you could get long on a daily close, right? Look for the first pullback. Or you could look at this on a different time frame, right? Lower time frame, manage it on the 1 hour or the 4 hour, and make sure that this is just continuing to get rebid, right? So you form another consolidation above that high, and it's just been up since. That's the daily close level right there. So prior to that, market was unable to do much above that level. Nice pop of volume right there. Look at the other previous times. Not really any volume behind it. So, yeah, super looks good. That's just a very clean technical chart. All right, guys, I'm going to wrap it up. Apologies, the stream felt a little like, I don't know. That's the best way to put it. I don't know, because I'm starting to feel shot. I guess I have a little bit of a head cold still, a little foggy. But hopefully I'll be back on this, let's say, what's today? Hop on again maybe this Friday. All right? Appreciate you guys tuning in, regardless of what form I'm in. And I'll see you next time.